Hello everyone and welcome to the DCS. I'm Robert Skinner at Container Exchange and I'm here with Jan Tiedemann. Welcome. And we are here today to do a short sort of chat about IMO 2020, Covid-19. Is 2020 the hardest year for the shipping industry since 2009? So we will discuss some industry questions around IMO 2020, and then hopefully we will receive some questions from the audience and we'll be happy to answer those as we go. So here we have Jan, and just a quick brief introduction about yourself and Alphaliner.
Well, Alphaliner, I hope most people will have heard of us. We're a consultancy firm that exclusively deals with the container market. We're both a consultancy, and our main business is that we run a website which is intended to be a one-stop shop for everybody who's a stakeholder in the container shipping industry, whether you're an owner or a shipping company or a terminal operator or a bank that's invested in ships. The idea is that everything you want to know is in there, from a vessel database, a port database of the services and charter rates. And that's the idea. And from that, we try to generate market intelligence that we kind of exclusively have because we have everything it takes to create that in-house. And I think that we are, to be modest, one of the leading providers of information for the container shipping sector. I'm happy to say that many of the container lines are on board with our product. So I've been doing this for 12 years in our offices in Paris, and now for the last few years back in our offices in Hamburg.
Perfect. Good to have you here. So we'll start with the first question, and that's, what are the challenges we are facing with IMO 2020 at the moment?
Well, as you know, from the 1st of January of 2020 of this year, the IMO has finally implemented a ban on heavy fuel oil, which obviously is good for the environment. It's something the industry appreciates. But in an industry where you have big ships and you have fast ships which are going at relatively high speeds on mainline routes, fuel has a cost factor of container shipping. And so obviously, when you had to switch from non-compliant heavy fuel oils to compliant fuels, which are either distillates like green gas oil, green diesel, or some blends, which we refer to as very low sulfur fuel oils. The first thing, of course, is that there is a tremendous price differential between these two, and bunker already being a major cost factor in container shipping. And we know that before that, many carriers were marginally profitable as it is already. That's been quite a burden for the industry. And let me be clear, I think that's a good development. Shipping has to become cleaner and greener and more environmentally friendly. But it hit the industry at a time which was challenging already in the first place. We had overcapacity in the market for many, many years. We had ship owners that were suffering because of low charter rates, again, due to overcapacity. We had carriers which were marginally profitable, as I said, again, mostly because of overcapacity and because container shipping is a very price elastic commodity, so it's very tough competition on price. And then all that came on top. Now you have a bunker bill, which is already half of your overall cost, and now that bill was supposed to double, and that's of course quite difficult to suck up. Luckily, I might say, because of a lot of other factors, the slow economy, shale boom, etc., the oil price has been relatively low, and the delta between the non-compliant fuels, which are cheaper, and the compliant fuels, which are more expensive, the delta is smaller than expected, which has given some additional breathing space for shipping lines to handle this. And then, of course, you had to start thinking about strategies and how to react. You convert your ships just so that they can still use cheaper fuels, or do you try to suck up the cost, or can you pass this cost on to the shippers via the rates? But again, has not been entirely profitable. And then when we talk 2020 and we talk IMO 2020, we have to talk about Corona as well, because it kind of hit container shipping like a double whammy in the first quarter of this year. So many shipping lines had decided we have to do something about IMO 2020. We have to retrofit our ships so that they can still use heavy fuel oil, but at the same time we install exhaust gas cleaning devices, so-called scrubbers. Let's send our ships to the yard. Let's have them converted, which takes the ship out of service for several weeks. And that was exactly the time when Corona hit. Most of the ships at the time were in China, most of the yards in China. That's where Corona started. And all of a sudden, the ships were immobilized, and the schedule slipped. And all this turned into an avalanche of problems at the beginning of this year.
So we've sort of talked a little bit just about how the carriers reacted. And you've mentioned how the carriers can sort of retrofit some parts of the boats, like the scrubbers. But what's your sort of overall view of how the carriers reacted to the regulation?
Well, first of all, on the technical side, you have many options, but principally there are three. You can do nothing. You can keep your vessel as it is, but then you have to bunker and use and burn the compliant fuel, which is a lot cheaper. You have no capital cost. You have no investment, but your fuel bill goes up. Currently, it only goes up quite moderately, less than expected. But of course, it's not a given. The delta between the compliant and non-compliant fuels can go up again, and then you have a problem if all of a sudden your fuel bill doubles. Well, the second option you might then have is you install scrubbers, which are exhaust gas cleaning devices. Depending on the size of the ship and the size of the engine, a scrubber will cost you between $5 and $6 million. It's quite a significant investment to make in a ship. And don't forget, major shipping lines have fleets of 300 or 400 ships. So we're talking about a great big deal of money that needs to be invested, which of course then gives you the option to still burn cheaper fuel. And over the years, your investment will repay. However, many of the calculations, well, do we fit scrubbers or don't we fit scrubbers, were made on the basis of there being a spread of $100, $150, maybe even $200 per ton of fuel. And then your scrubber investment would be repaid over a period of 3 or 4 years. Currently, the situation is different. The spread is lower, the savings are lower, so it takes a lot longer to repay your scrubber. That's the second option. Finally, the third option would be to switch to new fuels completely, and that's LNG. There are other options out there, but currently I see LNG is the only realistic option for the next few years. And of course, that means the ship as such is a lot more expensive. LNG is a new technology, engines, tanks, pipings, all that makes the ship at least for a big ship, $20 million more expensive. But then, of course, you don't have to worry about emissions that much anymore. You're way below all the guidelines. You're in the green as far as this is concerned. And you have to worry a bit about your supply chain, but most of all, of course, it's quite a high upfront investment. The market is slowly moving in that direction, but it's certainly not something that has been embraced on a big scale yet. At the moment, I can say the option that has been taken up most is the scrubber option, because even at the relatively low spread between compliant and non-compliant fuels, it still pays off. And even if your ship is already 10 years old, it will still pay off even under low spread between fuels. It will pay off within a lifetime of the ship. So that's the option that's been taken up. And I can say that in terms of capacity, about 1/4 of the global container fleet currently is fitted with a scrubber. Not in terms of the number of ships, but in terms of the capacity because of course it's easier to start with the big ships because these are sailing a lot, these are steaming a lot. That's when the scrubber really pays off.
And just quickly, for me, is it easy for the vessels to transfer straight to the low fuel oils, the low sulfur fuel oils, or does some modifications have to take place even then?
Well, I would say it's easy. Probably you will find a chief mate or an engineer on the vessel who will tell you I'm wrong. It's not easy, and the devil will be in the detail.
Yeah.
But it's in principle not very difficult. Any ship which can burn heavy fuel oil will be able to run on distillates. Maybe you have to do some minor changes on the piping, etc. And also don't forget that there is now a carriage ban on heavy fuel oil. That means that if your ship is not fitted with a scrubber, you are not even allowed to have heavy fuel oil on board. So that's what you have to do anyway. And I would say it is the easiest option. And of course, it's the first step because it still gives you the option then to do something else. You can still fit the scrubber after a certain period. So that's the minimum you have to do anyway, whether you want it or not.
Okay. And then, so we find ourselves in September now. So we've had, what, 9 months? We've had a lot going on in this year. But how does the situation look now, sort of looking back over the past 9 months?
Well, at the beginning of the year, there was a bit of a chaos because ships had to be sent for scrubber conversion, had to be taken out of service, which of course gave ship owners, non-operating owners, a welcome break because X% of the tonnage was out of service at the shipyards. So additional vessels had to be chartered, and the demand for tonnage as such went up. Then that escalated because Corona started, and the shipyards took a lot longer because some of them had to stop work. Some ships could not go into the shipyard and then had to waive their slot at the shipyard and then continue in service, albeit running on distillate fuels. Other ships were already caught in the shipyard. So at the beginning of the year, it started with a bit of chaos. And we had this that at the time the ships were stuck at the yard. Owners could fill in, and then the burden of idling, of having tonnage unemployed, shifted from the non-operating owners, which are usually the first to bite the bullet when there's overcapacity, because when you can get rid of a charter ship, that's what you do. The burden shifted to carriers, and the carriers bore the burden of vessel unemployment because the ships were stuck at the yard under conversion. And then, of course, there was all this happened in a time of the year which is traditionally slow anyway, in the first quarter. For various reasons, ships are coming back, scrubber conversions are available again. But also, the market for transportation has picked up significantly in the last few weeks and months. I can speculate about the reasons. First of all, the market had dropped because of Corona, but maybe, ironically, even Corona might have some positive effects on market demand. People are not going on holiday, not spending $1,000 or $2,000 on a holiday in the Caribbean, but maybe they are spending money on things which are being transported, buying new clothes, buying a new computer, buying a new bicycle, buying a new car, whatever. Maybe even home office work had an effect. People buy new computers, new screens. So there was a lot of demand in the last few weeks, and the market has picked up quite a lot. Then there's also some talk about the upcoming elections in the USA. Maybe Trump is going to ramp up the rhetoric against China again. Maybe there will be new tariffs. So there's some front-loading effect. Well, if we can order something now and we know there's no tariffs, and maybe in 2 months there will be tariffs, so we'd rather try and order now. So actually, some east-west trades are booming right now, and believe it or not, on some trades, vessel capacity has already become scarce, and freight rates are now quite high, actually, which we have seen because many carriers, or at least a handful of carriers, which reported their results for the second quarter, despite IMO 2020, despite Corona, have reported fairly strong or surprisingly strong result. However, I would have to warn that we're a bit cautious here because I'm not sure how long this is going to last. As I said, it's going to contain an element of front loading. It's a peak season. I'm not sure it's going to last into the fourth quarter of 2020, so it might become a bit more challenging again. And then, not to mention at all, we're all worried, and we hope it's not happening, but there can still be a second wave in some countries of Corona when the winter season comes in Northern Europe and the USA. Who knows what's going to happen?
Yeah, I think I've just spotted a question come in here. If I can just move that. So we have a question from Peter here, and it says, how much do you think that COVID-19 has delayed further green initiatives such as IMO 2020 compared to a world that hadn't been hit by a pandemic?
If I had a mirror, I don't know. I believe that Corona has not delayed. Well, in terms of IMO 2020, I don't think it has delayed anything much, apart from the scrubber retrofit at shipyard, which was delayed by a few months. But I do not think that there has been a strategic delay. What we may say has happened is that, is it related to Corona, or is it not related? The oil price has been very low, record low this year, and that is, I think, in part related to Corona. Factories closing, demand goes down, airliners are staying on the ground, but in part also to a general slowdown of the economy and to shale oil and gas in the US, overproduction, all the shenanigans going on between Russia and the OPEC. But the oil price is very low, and Corona played a part in that. And the low oil price, of course, disincentivized for the time being investments into greener technologies, such as scrubbers, because the business case has become smaller when distillate fuels are comparatively cheap. And the same goes for LNG. LNG did not only have an environmental advantage over fuel oils, it also had a cost price advantage. So it was win-win. Once you've committed, of course, that's the elephant in the room, to the big capital investment of having a container ship with LNG propulsion built in the first place. But since the delta has become smaller, the incentive to do these things have also become smaller. And then there were all kinds of knock-on effects. We all know that, for example, Hapag-Lloyd is trying to convert as a test one of their big container ships from heavy fuel oil, currently running on gas fuel oil, to LNG, just to have a proof of concept and to see if that's possible. And that has been delayed. But I do not believe, for example, I think it's going to happen in the next few weeks now, rather than compared to at the beginning of the year. But I do not think that this is a strategic shift of paradigm. We're going away from that. We don't want that. I rather believe this is the situation right now. We need this tonnage elsewhere because another ship didn't come back from scrubber refit in time. Now the market is up. We cannot send the ship to the shipyard. So in short, I do not believe that green initiatives have been delayed in the bigger picture, but momentarily, because of the carriers we had in the market, probably some of that happened. And also, I do believe that at the end of the day, it comes down to money, obviously, and green initiatives and the next steps after IMO 20. Maybe one day there will be a regulation, IMO 2030 or IMO 2040. These initiatives will be driven by the regulator, by governments, by legislation, and of course by technical progress, after all. One thing I might say, which is actually quite interesting, we're always, in respect to IMO, we're talking about clean fuels versus heavy fuels versus scrubber. One of the things that the shipping industry has done, and I might say quite successfully so, and that's something where the environment, ecology, and economy actually go hand in hand, is that we have started in the industry to think much more about saving fuel in general. Doesn't even matter. Well, the second step would be which kind of fuel do I use, or do I install a scrubber? The first step obviously should be use as little fuel as possible. And that's something which carriers have done, for example, by slowing down services. One of the main factors that contributes to the consumption of container ship is speed. So a relatively modest speed increase might easily double your fuel consumption, which also means that a relatively modest speed decrease can save a lot of fuel. So you might think about taking measures like, instead of going between Asia and Europe in 12 weeks, you might put an additional ship in there, and you might do a round trip in 13 weeks. You might try to optimize your port coverage, for example. And that has been helped a lot by market consolidation. There are now way fewer players in the industry through mergers and acquisitions, through alliances, than there have been a decade ago. And that means this also gives carriers a bit more wiggle room to cooperate. Well, I'm not covering this port on this service, but I can still cover this port on that service. So it allows me to sail past this port, slow down, and save fuel. So there's a lot has happened in terms of optimizing the network and the schedules and the speeds in the first place. It has happened in earlier years already, but I think all this has received an extra push in recent years.
We have a question here. Have the latest developments undermined the investment case for scrubbers, especially open loop scrubbers?
Yes. Well, I wouldn't say undermined. The low price of bunker has not undermined, but has diminished the business case of a scrubber. However, the business case has always been very strong from the get-go. I think there was a spread of $100 per ton or more for a big container ship. You can recoup the investment into a scrubber in 2 or 3 years. So that means if the spread goes down to half of what it used to be, the investment will still be recouped, but only maybe in 6 or 7 years, maybe 8 years, which in the bigger picture is still a good period for a return on investment. So I do not think that the business case was hurt too much. When we're talking open loop scrubbers, yes, that is a problem because there's an increasing number of ports and states and coastal waters where the discharge of scrubber wash, so that scrubber wash means the water that the scrubber produces, where the sulfur oxides have been washed from the air into the water, where this is no longer allowed to be disposed into the sea, which means if your scrubber is an open loop scrubber, indeed, there are more and more waters where you're not allowed to use it, because what an open loop scrubber does to a degree is move the problem from the air to the steam. That's not quite true, because sulfur dioxides are way more harmful in the air than in the water. But if you opt for a scrubber now, it will have to be a hybrid or a closed loop scrubber in the long run, I believe. Because the ban of open loop scrubber, that will take precedent in more and more places around the globe, I think.
Just quickly, we're sort of running out of time quickly. I mean, we've talked a lot about the market and the various pressures on it. I mean, quickly, is it a good time to now buy any vessels, or would you sort of hold off?
When you say buy vessels, do you mean buy second-hand tonnage or order new ships?
New ones.
New ones. Well,
new vessels.
There's a funny thing that over the last decade, despite all the crises we've been through, the container fleet has grown rapidly at about a pace of 1 million TEU every year. Even in the Lehman crisis, even after that, it was relentless. And now, for the first time, the global container ship order book has dropped to below 10% of the current fleet. And if you say maybe 25 years is a realistic asset life of a container ship, the order book reaches 2.5 years. maybe that's a healthy replenishment rate, which no longer promotes growth in the industry. Maybe we're now in a mature industry. But this very low order book and the fact that some yards in Asia, especially, are struggling and are offering low prices, and combined with the fact that more modern ships are also more environmentally friendly, and you could opt for new technologies, ships which are more economically to run. I do believe that there will be orders in the near future, also orders for bigger ships. Maybe we'll see them in 2021 for delivery in 2023. I think we will see a next wave of ordering, but at the same time, I'm hoping there's some restraint, because the over ordering was what has killed the industry for many years. Because the lingering problem for many years was overcapacity. That was the main problem.
Okay, Jan. Well, thank you very, very much for coming to Exchange today, taking some time out of your day to talk to us about IMO 2020. We hope you've found it informative, and we look forward to hopefully seeing some of you at events in the future.